everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of September the 12th, 2016. Now, to get started, we're going to begin where we always do with the US dollar index, a very important factor in Forex trading, commodity trading, and even equity trading. So when we look at the dollar had a pretty choppy week, but predominantly our main range continues to hold that I've been discussing basically for the last 2 to 3 months here now. As we look at the Brexit, after the UK vote for the Brexit, we can assess here that the dollar remains trapped in the range between the 93, basically 93.75 and 96.75. Our key vantage point level is now sitting at 95.37. Now this is a critical level for the market to move above. We've closed just slightly below this area here at 95.32, but I believe that we will start to extend higher on the possibility of a September rate hike. Now, this could be another classic case of buy the rumors, sell the fact with the dollar here. In my respectful opinion, I don't think they will raise rates, but in December is very, very likely. September, I don't think so. Now, the dollar should feed off of this. We're sitting at 50 on our predicted RSI. Our predicted short, medium, and long-term difference, we have a very mixed signal here. We can see last week in last week's outlook, I talked about this medium-term crossing over the long-term predicted difference. Our medium-term predicted difference is now turning higher with our neural index, but again, we have to push above here, above the VantagePoint 18-day predicted EMA at 95.73 for those longs to continue to be basically to be valid in the dollar against the British pound, the euro, the Swiss franc, and even the Japanese yen. So at the present time, it would appear that the dollar is going to extend higher. We can see that our short-term crossover from VantagePoint is starting to move back to the upside, but our medium and long-term crossovers are very mixed. Now, the long-term crossover is basically sitting flat right around a critical area, 95.26, 95.27. So if this long-term crossover from VantagePoint can recover off this trend line that I've drawn in here, then the dollar should have a decent week, at least until Thursday of next week. But the one thing we do want to watch very closely is, of course, the U.S. retail sales. Are they going to rebound? If they do rebound, that is going to fuel a very strong dollar rally. But if it's another weak number, much like August, then we could see a real problem for the dollar midweek. Now, the equity markets here, very important, the S&P 500 for the futures traders that are watching this video this week. Once again, I'll talk about this the breakout point from the Brexit high. We can see where the S&P 500 broke higher. It's remained higher this entire time, but we've had a very significant sell-off on Friday. Now, because it's a Friday, I'm not convinced we're going to have a lot of follow-through here, but this is an absolute critical level to watch where this market is closed. Now, the key vantage point level comes in at 21.71. We are closed well below that level. But again, the high from the Brexit point is right on this level right here around the 21.20 area. So a sustained break of 21.20 will potentially see us move back inside the Brexit range, which could point to a move back down to the 2000 mark. But at this particular time, we have a lot of pundits, a lot of analysts that are saying get long equities, get long equities. We're going to 2250, and that very well may be, but at the current time, we want to watch a critical level that will give us that early edge here. Now, after a fresh triple EMA cross, what I do want to point out here is the triple EMA cross from VantagePoint came essentially 2 days before this big sell-off. We had a 2-day warning that this was going to happen. When the market was shocked by this big sell-off, this signal was already in play from VantagePoint, and that's the critical thing that I want to point out here. So with that fresh triple EMA cross, what I really want, we should really be looking at here, guys. The last triple EMA cross we had from VantagePoint was just after the Brexit vote. After a big sell-off, we retraced. This triple EMA cross from VantagePoint has been in place since the end of June. So this is the first new triple EMA cross we have had in almost 3 months here, guys. This could be a very significant move to the downside, despite what a lot of analysts are saying that it's simply a buying opportunity. Well, guys, it may not be, or that buying opportunity, they could be off by quite a few points here. So that's not, and remember, in trading, it's never about being right or wrong. It's about understanding critical levels, where to get in, and more importantly, when to get out. The last thing we want to do is get trapped long here. If we can retake 2171 by midweek, then I'm sure the equities will continue to push higher. But if we cannot get back over this critical vantage point level of 2173, then longs are not on the table here, guys. So just remember what I've said, okay? We can see that the additional global equity markets here are following the S&P 500. The DAX, again, a fresh triple EMA cross. 10,595, we're closing at 10,567, below the key vantage point level. The same applies. The Nikkei is probably the strongest of the group right now, 16,741, but even that, guys, we've closed at 16,735, below that key level. So the global equity markets as a whole, not just the S&P 500, are moving lower as forecasted by VantagePoint. These are very important things that we want to take note. Now, when we look at oil, again, I've been predominantly a bear on oil for at least the last year here. We've had corrective moves. Once again, we've corrected back up to this 48 level, which is the Brexit, the breakout point from the Brexit bar, and once again, we're failing at this particular level. In my respectful opinion, oil is going to probably stay trapped between this swing high right here, which is at about the $49 a barrel, and then the swing low down here just under the $40 per barrel. That's likely where we're going to stay for the remainder of 2016. I don't see a big push up in oil. It's going to take some kind of catalyst, and even then it's likely to be short term as demand remains very low and supply remains very high on oil. Now, when we look at gold, gold is another one here that, again, I've talked about repeatedly. Gold has definitely had a decent year in 2016, but we are just simply failing right around this Brexit high. So basically, if it were not for the Brexit vote, then gold would be back down here around 1200, 1260, which I believe to be fair value. I believe it is overvalued, grossly overvalued at 1360, and we are likely going to extend lower. Now, what could push gold higher? No rate hike in September, a dovish Fed. Yes, gold could go higher, absolutely. But for now, we look at this Brexit range between basically 1360, 1370, and the lower side of that down around 1260. We are likely moving at least back down to 13. This is where we have found some interim support. But once again, we've got a fresh triple EMA cross from VantagePoint. 1332 is the number to watch this week, guys. And again, we've closed at 1370, which is by definition still bearish. On the retracement back the second time, I'll point out too that we did not hit that Brexit high. We're making a series of lower highs, but we are not making a lot of new lower lows here. So we're looking for a break of 1300, and that would confirm a bearish bias on gold for at least the next few months or so. Now, as we come into our euro dollar, guys, once again, I want to point out here, it's very important to have an identifiable range that you can actually trade. I hear a lot of different ranges, but the range that I would look at very closely, again, is that Brexit range, because we haven't broke it since this wild trading day back in June. So when I look at the critical levels from VantagePoint right now, the euro, of course, selling off again, 112.07, but we've managed to close just above that VantagePoint 18-day predicted EMA. Now, our neural index is pointing down. Our predicted short, medium, and long-term differences are very mixed. Our predicted MACD sitting on a trigger, unable to cross to the upside, and our RSI is basically dead flat at 50. So this points towards a bearish bias. We know where basically the interim support where the euro is found has been down around this 111.10 area. I would look for a move towards that area at the beginning of the week, but I'm not convinced we can get below that. If we do, we could potentially target back down to this range bottom, down around the 109.50, but it's going to take some kind of rhetoric from the Fed as a catalyst to push this lower. So right now, I think the euro is going to remain trapped in this range between 115 and 109. That's the approximate range, give or take a few pips on either side. But we want to be very careful with this particular pair. It's heavily manipulated. At the particular time, we can see that our short term is crossing over our medium term predicted difference. Neural index down, strength indicator down. Most of our signals here are pointing towards euro weakness, which of course would indirectly point towards strength in the US Swiss franc. Now, the critical area that we need to break above, get above this 98 level here, guys, so we can retarget back up to this 99.50. In my respectful opinion, we are absolutely heading to 99.50 prior to the end of 2016, barring some sort of crazy announcement. The Fed has decided that there'll be no rate hike until 2017. That, of course, would absolutely kill the US dollar. But for now, most of our signals remain mixed with a slight bias to the upside. So when we're looking for a needle in a haystack, the predicted MACD from VantagePoint, a very, very accurate indicator here. You can see the MACD with our triple EMA cross led to a nice move here. We can see it both on the upside and the downside on this pair. So our MACD is crossing back to the upside, telling me that we are getting ready to move higher on US Swiss franc yet again. But it is a very tricky pair. Once again, we remain trapped in this Brexit range between 98 and 95.50, but it looks like we are going to have a much higher low this time, which tells me we've got a real shot next week of pushing through the 98 level and staying above it. But we are definitely going to need a better retail sales number out of the US than what we had last month. Now, as we come into the Brexit, I've talked about this one on a repeated basis here over the last several months. I talk about the breakout point on the Brexit, the retracement point, and basically I've stated that our sell zone is between 133.60, and the 135. Well, lo and behold, guys, we have failed yet again at 135. We can see that on that simple line that I've drawn on here from these swing high points, the neural index picked up on this from VantagePoint very quickly. Medium term crossing over the long term predicted difference. Our strength indicator, still a very mixed signal on the pound. Now, we're going to have a lot of fundamental news come out of the UK next week. My concern with shorts on the British pound is that the new Bank of England Governor Carney, this guy was from Canada. He's a currency hawk. He tends to drive the country wherever he's working at the time, tends to drive that currency up. So be careful, be very, very cautious of shorts on this one. We've got a lot of data coming out of the UK next week. I would be very cautious with this one. We've closed at 132.61, which is still above the VantagePoint 18-day predicted EMA that I want to bring into play here. Now, if we're holding above 132.19, we're long. Below 132.19, we're short. That's the key thing with the predicted moving average. So we're going to watch that area very closely. But right now, we are in this sell zone. In order for the British pound to really start moving, we've got to break free and clear of 135. Guys, out of this tight channel we've been in, very identifiable channel here where basically real money is coming in. They're selling here. You can see them coming back in, selling then again, and then this past week they're selling here. Now, a lot of people, I assume, were stopped out on longs on Great Britain, US in a classic bull trap here. We don't want to fall for this. So a clean break of 135, I would be very excited about longs. Sadly, though, the British pound still has a very high correlation to light sweet crude oil, and unless oil can recover, it's going to take some pretty phenomenal data out of the UK to get this one above 135, so we do still have a clear bias to the downside. Now, with the dollar yen, once again, a tricky week ahead for this particular currency pair. We've got our key vantage point level at 102.20. We had a big sell-off last week, which I suggested would happen on Monday. Then the dollar yen turned around. So we've got our Brexit bar here. Our range high remains up around the 107 area, and our range bottom down here just above the 99 level. Very little has changed here, guys. So to begin the week, our pivot area here is the 102.20. We've closed at 102.68. What we need to be mindful and be very clear to watch for is those equity markets. If the global equity markets sell off across the board, if the range that I talked about on the S&P 500 breaks and we get below 2100, the yen will strengthen across the board against the US dollar. It will strengthen against the euro, the British pound, right across the board. So be very, very careful of this. Watch this 102 area very closely. When I look at our medium-term predicted difference crossing over our long-term predicted difference that I discussed last week, that led to a pretty decent move to the downside, only for it to turn around midweek on the hopes that the Fed will hike in September, which again I am not really on board with at this particular time. Once again, mixed signal here in the predicted MACD. Our predicted RSI not in a trending position. We're at 55.5. For a breakout trending move, we're looking for a move above 60. Case in point that I will make right here. You can see that when we're combining our VantagePoint triple EMA cross with our predicted RSI and more importantly our predicted MACD, we have an identifiable move in each particular case. We don't particularly have that right now. We should watch the level. If we lose the 102.20 area midweek, then chances are we are going lower on weaker equities. Now, as we move into our commodity currencies here, the USCAD, one of my favorite trading pairs, I am not a buyer of Canadian dollars under any circumstances here, guys. I think that the Canadian dollar has its work cut out for it with the new Liberal government, which is clearly not doing well at all. And we've got further problems here with commodities. Canada is still a commodity-based country, and unless commodities turn around, oil, silver, gold, all these things turn around, the Canadian dollar is a very good currency to sell, not buy. Now, our key vantage point level to start the week is going to come in at 129.67. We're looking for that area to hold as we've closed at 130.48. Now, once again, our indicators from VantagePoint are definitely turning over to the upside here, meaning selling Canadian dollars and buying US dollars. Now, our predicted RSI 59.9, telling us we could have some momentum building here. The crossover on the predicted MACD, and of course you can see that I've drawn in our trend line support rate in this area here. As long as we hold above this trend line at 128.20, 128.30, then longs carry a very clear edge here, guys. So watch for any pullback to get long on here. But right now, to begin the week, we have a lot of heavy support here from VantagePoint. And I'll just identify this for everybody here. We've got 129.80, 129.68, and 129.67. These are all pivot areas that we can potentially use for buy positions. Okay, guys? So watch your levels very closely. But 129.68, 129.76, this level continues to hold, then we should be able to push up towards the 132 in the not too distant future. Now, with Aussie US, we have two more commodity currencies to go here. Aussie US and New Zealand US, as any one of my own direct clients will tell you, are not my favorite pairs to trade, but there's still money to be made here, guys. That's the key thing I want to point out. So when we look at these levels, we have closed below 75.60. I've talked a lot about this over the last month or so, this 76.50 area, that we need to hold above this. If this is truly a breakout that we're seeing here in these breakout sections, but it looks like these are repeated bull traps here, and a lot of market participants keep falling for it here. Now, our critical support here with the trend line that I've drawn in here is going to come in at 75. If 75 holds, guys, and the equities turn around and start moving higher, gold moves higher, then the Aussie will move higher. But if they don't, then the Aussie US is likely going to break through this trend line and try and push back down between 74 and 73. Our VantagePoint indicators right now are confirming this. Our neural index is down, our predicted short, medium, and long-term difference, and our strength indicator all pointing down. But that strength indicator from VantagePoint, you can see, is a concern for me. We're sitting at negative 100 here on the strength indicator. When we were down here before, basically it bottomed out on this particular bar, on the Brexit bar, and then we bounced higher. So it's going to be very interesting to see if our VantagePoint strength indicator can continue to point to weakness on this pair, but be very cautious on this level here. Now our predicted RSI at 33.3 here, guys, on a break of that all-important 40 level could lead to a much bigger move. Now, again, we want to watch we've got a crossover in our predicted MACD pointing down, but again, watch this 75 area. If we break through 75, guys, then Aussie US is likely getting ready for a much bigger move to the downside. Now, the same thing could, and I'll emphasize the word could, apply to New Zealand US. When I look at this pair right now, we have a problem here. We had a very tight wedge formation that I've been talking about here, and we broke through it, only for it to turn around and crash lower on a new, once it made a new high, it immediately reversed. But this Brexit high at this 73 level is absolutely critical next week. So I'm going to point this out. The VantagePoint 18-day predicted EMA 72.99 is also sitting right here just below this trend line. This trend line currently is coming in around 72.50. So if we could push below the VantagePoint 18-day predicted exponential moving average. However, we have to break through this critical trend line at 72.50. If we lose 72.50, then we are probably going to come into the 71 area, potentially even below the 70 level. But at this particular time, my optimism on that remains heavily guarded here, because our indicators from VantagePoint, but they are warning of a bigger corrective move. And what I like to draw people's attention to is these proprietary indicators from VantagePoint, the predicted medium and long-term difference. We have a crossover. The medium-term predicted difference is crossing over the long-term predicted difference. Our predicted RSI is at 49. We are losing our bullish tone. So in most cases, when the medium-term trend starts weakening against the longer-term trend, if nothing else, a significant corrective move is probably in play here. So we're going to watch those levels very closely, but again, we're closing at 73.18, just above this critical pivot area of 72.99, followed by 72.50. So if we lose 72.50 again, guys, that's when we really want to start looking at shorts. But right now, the New Zealand currency, the data coming out of New Zealand is far better than Australia and Canada. So of the three commodity currencies, clearly the New Zealand is the stronger one. But if the global equity markets, the global commodity markets start to move lower, New Zealand is going to come under pressure with its commodity currency counterparts.